Hi everybody, welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Hi everybody, welcome to another market outlook for September 2012 by Atlas Wealth Management. You can get on our email mailing list by going to atlasbuildswealth.com, going to contact us, send us your email address. We send out market commentaries every other week, and we also send out stock ETF, other research reports every couple of months. That there is no charge, no obligation for this. You can just go to contact us, put in your email address, and we will put you on that list. So let's go through our market outlook for September 2012. My name is Ron Lang, and one of the things that you'll see here on the S&P 500 index is we have been going up pretty consistently since the end of that May, early June low. And one of the things that we did here back in early mid-August is we peaked probably around that 1425, 1426 level with a sharp pullback. And a lot of times when you see these type of candle formations at the top of a trend, you could pretty much expect a pretty good downtrend. But you know what? We had such anemic volume throughout the summer, especially in mid to late August, because it's a big vacation time, that our markets pretty much stayed above that 1400 level, nice round number level, which is a good technical base of support for price action in the market. One of the things that we want to look for throughout September is pretty much a lot of range-bound action. We just had the Republican National Convention last week. Democrat National Convention is this week. So we should see pretty much of a fairly good stagnation of price action here, and we might even see a pullback to the 1376 level, 1370 level around here before we come back up. We're looking for pretty much the same range in in September as we did see in August, probably about a 1400 to 1420 level in September, and we should see a rise to about the 1450 level in October. Back at the end of May low, early June low, we said that there would be about a 5 to 15% rise in the S&P. The high end of that puts us around that 1440, 1450 level that we should see by the November election. After we get a September pullback, we will get that rise. After the November election, we probably could flip a coin here. We got a lot of things coming up between Europe, the fiscal cliff, coming up at the end of 2012 in December, and it doesn't look like any of that will get resolved by that November election. So once that November election takes place, that fiscal cliff issue will be paramount and probably number one headline going into Thanksgiving and December until that gets resolved. So let's take a look at our market leaders. First, it'll be Apple. Apple has been on a meteoric rise, as everybody knows, and after a nice pullback here, after peaking here around the 645, 650 level, we had a pullback and then another rise again with the anticipation of the iPhone 5 release in September. So one of the things that we could look to do here is everybody wants Apple products. They're expecting big demand for that iPhone 5 and the iPad 3. So we're looking for this to go to that 700 level probably by the end of December. For a big end-of-year holiday shopping rush. So let's look at ExxonMobil here. ExxonMobil has been on a nice rise since early June from that $77 level to the $87, $89 level. Prices kind of flattened out in August with a lot of other big blue chip stocks. So one of the things that we're looking for here is probably a pullback to the $85 level for a rise up to the $89, $90 level by the end of October. Microsoft has been on a very interesting run after making some nice 3 and 4 year highs here. We had a pullback to that 28.50 level before we come back up to that $30 level. And that $31 level has been a tough area to breach, but we could see that happen by the end of October. Walmart has just been on a terrific run as the economy has been uncertain. People have been going to Walmart. What we could look for here is a price exhaustion, perhaps a pullback to the $68, $69 level before it comes back up again by the end of October. IBM price has pretty much flattened since it hit all-time highs here back in the March timeframe. We could look for a pullback here to the 190 level before it goes back up again, but we want to look for a continued uptrend over $200 as it has been a pretty good resistance level here, both back in mid-June and in mid-August. AT&T, in full disclosure, I am long AT&T. Had a terrific run here back up over that $38 level in early August before a price exhaustion, some profit taking. As you can see here, this 3640, 3650 range here has acted as pretty good support above the 50-day moving average. AT&T has been a pretty good dividend payer. Obviously, a lot of money has been going into it since the end of April. We could look for this to go back above that $37, up towards that $38 level by the end of November. GE. GE's price has been on a pretty good run here since December. And right now, as you can see, price has been basing, almost making a bullish flag formation. GE is one of our market leaders, and we could see it getting above $21 by the end of October, which, as you can see right now, is holding as pretty good resistance. Chevron has also been on a pretty good run. Chevron is one of those conglomerates in the oil industry that people want to put money into because it is a good dividend payer. Price is consolidating here. As you can see, it's another bull flag, looking for some price exhaustion before it gets above the $113, $114 level, which is holding as pretty good resistance also. Google's also been on a very good run. As you can see here, once it bypassed the 612 range, it really went on a nice run to a 4-year high above the 680 level, holding at above 680. Where next stop is 700, and if it could get above 700 with some pretty good volume, we're looking at a pretty nice run from there. Procter & Gamble. This has been a pretty good staple stock, as you can see here. A lot of sellers like that $67, $68 range. So as you can see here, price is pretty much consolidated after a really nice run. Procter & Gamble came out with some pretty poor results back in the April and June timeframe. So it came on a pretty good run here. And one of the things that we're looking for here is a break of this $68 level. If it could break 68, we look at this going to 70, 72 pretty quickly. And it's a good, very good staple stock, pays a pretty good dividend. Coke. Coke was on a very nice run here after it announced its potential split. So after it actually split, one of the things that we're looking for here is for a demand around that $36.50, $37 level. And that looks like a pretty good buying area there for Coca-Cola. McDonald's has kind of lost its way after hitting an all-time high at the 102 area. We needed for it to break above this downtrend here at around $93, $94. And then it's going to run into a lot of resistance here. But as you can see here, this $85, $90, $86 level has held as very good support for McDonald's. A lot of buyers have kept coming in. And as you can see here, in a pretty poor month for volume, McDonald's stayed pretty true here, including a nice day here on Friday after Bernanke's Jackson Hole speech. Next stock is Home Depot. Home Depot's been on a terrific run here. A lot of home improvement going on, a lot of people putting more money into their houses, and we see Home Depot going much higher. Looking at Caterpillar. Caterpillar's been on a pretty tough run here, and it finally broke its downtrend, but it came back to retest. We really need Caterpillar here to break $92 level, and once it gets above this level here, we can see some pretty good price action to the next level. Following the Dow theory, the transportations have really been very anemic. After it kind of peaked out here, a lot of people look at, well, in order for us to hit new highs in the market, we really need to have the transportations lead the way. And as you can see here, the transportations have not gone above the downtrend, and really truly looking for some pretty good price action here for the transportations to get above this 5200, 5250 level before it has a chance to try and make new highs. So that is our market outlook and reviewing our market leaders. Watch the transportation index here to really truly see if we can get any strength and momentum in the indices. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.